All right, let's move on and also talk about gasoline prices. Now, US gasoline prices have surged past $4 to 50 cents per gallon for the first time since July 2022. The national average stood at $4.52 on Tuesday. Now, as global oil markets react to escalating tensions in the Gulf, disruptions in the Strait of Hormuz are constraining supply, pushing crude prices sharply higher. Brent crude has jumped nearly 58% since the conflict began, feeding directly into higher fuel costs across the United States. The price spike is being amplified by tightening domestic fuel supply. US gasoline inventories have fallen to 222 million barrels. That's their lowest level since December and below the 5-year seasonal average. Recent data shows a weekly drop of over 6 million barrels, while demand remains resilient at nearly 9 million barrels per day. Analysts say that this imbalance is supply-driven, not demand-led, which is adding to the pressure. Refinery disruptions, they have further tightened availability, accelerating the upward move in pump prices. With the peak summer driving season approaching, elevated fuel prices pose both economic and political risks. California is already seeing average prices above $6 per gallon, highlighting regional extremes. Analysts warn that unless shipping through the Strait of Hormuz resumes smoothly, gasoline prices could remain above $4.50 or even rise further. Forecasts suggest that inventories may fall below 200 million barrels by late August, keeping the markets tight. For consumers, this points to a costly summer, while policymakers face mounting pressure ahead of key elections.